Let's talk about four awesome dividend ETFs. Looking at the first ETF, this one is going to be the FIG, which is the Vanguard Dividend Appreciation ETF. If you're looking for the index fund equivalent, you want to go with the VDADX, which is the Vanguard Dividend Appreciation Index Fund Admiral shares. Now, with this ETF, 97 to 98% of it is invested in US equity, which pretty much means US companies. All large cap companies, out of those large cap companies, 20% of those are invested in the financial sector. And the top three companies are United Health Group, Johnson & Johnson, and Microsoft. This fund has an average 2% when it comes to the dividend yield. Dividend yield explains simple. How much dividend are you getting for the price that you're paying? So if you paid $100 for an ETF and the dividend yield is 2%, you'll get $2 in dividend income. So yes, this is a 2% dividend yield on average. And then the expense ratio is extremely low for the dividend ETF at 0.06%. And going back to the dividend yield, don't look at a lower dividend yield of let's say 2% as a bad thing, because with that dividend yield of 2%, whenever you get a dividend in an ETF or an index fund, you're actually reinvesting that dividend to buy more dividend paying companies. So in this case, that 2% allows you to compound your money and build your wealth. Number two is the Schwab US Dividend Equity ETF, also found under the ticker symbol SCHD. Now, with this particular ETF, 99% is invested in US equity, all large cap companies, with the highest percentage being in the financial sector, which is 21%. And then the top three companies are Merck and Company, Amgen, and IBM. This ETF also has a very low expense ratio at 0.06%, and then the dividend yield is a little bit higher at 3%. So SCHD is a must-have in your investment portfolio. Number three is the Vanguard High Dividend Yield ETF, which you can find under the ticker symbol VYM. And then if you're looking for the index fund equivalent, it's going to be VHYAX, which is the Vanguard High Yield Dividend Index Fund Admiral. Now, with this ETF, 97 to 98% also invested in US equity, also large cap companies, but the top three sectors in this case are going to be financials, consumer staples, and healthcare. And then the top three companies in this ETF are ExxonMobil, Johnson & Johnson, and JP Morgan. This ETF also has a very low expense ratio at 0.06%, and then the dividend yield on this one is also 3%. And number four, this is the highest dividend yielding one, which is the VNQ, which is Vanguard Real Estate ETF. Now, in the real estate sector, you will always have a higher dividend because they pay a higher amount of dividend income out of their net income. With this particular ETF, 99 to 100% invested, of course, in US equity, mostly mid-cap companies. And then this ETF does have a little bit of a higher expense ratio at 0.12%, but not that high compared to what you will see when you look at mutual funds. This ETF is 100%, of course, invested in the real estate sector. And then the top three companies are Prologis, American Tower, and Crown Castle Company.